So, my dear friend, we are proceeding to the next slide. Accounting basic we are discussing. So, in last slide, we have already taken the introduction about the class 11, 12, BCom, BBA, MBA, and this is a little bit my formation. So, now we are going to discuss the purpose of closing entries, why we are making it. So, basic purpose of closing entries updates the owner's capital account in the ledger by transferring net income loss and owner's drawing to owner's capital. And we are preparing temporary accounts like revenue account, expense account drawing for next period posting by reducing their balance to zero, or we are transferring this account to the trading and profit and loss account and the other account to close this. So next, the temporary accounts and the permanent accounts examples are here. So my dear friend, temporary account includes all revenue account, all expense account, owner's account, and the permanent account are all assets account like land, building, plant and machinery, liability account, capital, bank loan, creditors, bills payable, etc., and owner's capital. So the temporary account are closed, but the permanent account are never closed. So next one is post closing trial balance. So my dear friend, after all closing entries have been made, we are journalizing and we are posted. Then post closing trial balance is prepared to make the final statement. So here we are again taking a bird's eye view, the steps in accounting cycle. So the first we are analyzing the transactions. Transaction is the basic thing in the business operation. There are sales and purchases and a number of transactions are happening. To pass journal entry, to record that, the first task is to analyze the transaction and then journalize the transaction, post them to account, prepare a trial balance, journalize and post adjusting entry, prepare adjusted trial balance, prepare financial statement, and journalize and post closing entries. So these all we have already discussed. Next one is very important, the suspense account. When the two sides of the trial balance is not matched, it indicates there are some error. So to make it, we are putting the difference in an account. That account is known as suspense account to make the financial statement at the end of the year. So again, after finding out the reasons and causes of the difference, we are disposing the suspense account, putting the correct thing in the correct account. So here we are making the correcting entry. Errors that occurs in recording transactions should be corrected as soon as they are discovered by making correcting entries. So correcting entries are unnecessary if the records are free from errors. If there is no errors, there is no need to make the correcting entry. We can generalize only when there are some mistakes. So how we are preparing trial balance? Here we are going to discuss. Theoretically, spreading a trial balance can be prepared in the following three manners: total method, balances method, and the total cum balances method. So rectification of error, as we have seen, if there are some error, we will rectify it. There are certain types of the error which we are going to discuss here. We can categorize the errors from point of view, the rectification, error which do not affect the trial value and the error which affects the trial value. Next, there are some guiding principles for making the rectification entry. We must understand it to do the correct thing. Next one is the test question. It is very important how much we have understood the general rule and the golden rule of accounting. So that rule here we will apply. So here are a question. Credit purchase from Raghuraj rupees 20,000. If it is not recorded, if it is recorded 20,000, if it was recorded 25,000, if it were not posted to the account, and the last one is we are posted to account 2,000. So next one is what is historical cost. This is very important. So we are recording in books of account at the cost which we have purchased, the amount which we have purchased, paid. So next one is what is non-current assets. This is very basic things. So these all are the revision. We have already discussed it. So this is the long-term assets. So we can have the example investment, property, land, building, plant and machinery. There are some intangible assets like patent, copyright, trademarks, etc. So current assets, this is again the assets which are convertible into cash within a year is called current assets, like cash, bank, stock, debtors, bill receivable, etc. Next one is meaning of trial balance. What does it mean? A statement showing the abstract of the balance sheet, debit or credit from the various account. With the help of this we are preparing it. So the trial balance is the test and accuracy of the entry which is made in the books of account. There are certain objectives, my dear friend. The main objective of preparing trial balance is to ascertain arithmetical accuracy, help locating errors, to help preparing final account. Various types of error as we have seen and discussed. So there may be error of omission which is omitted, error of commission, error of principles and compensating errors. So these all are the various errors. Before rectifying it, we must understand it clearly. So there are again for your revision, long-term investment, what does it mean? This is the investment and the resources can be realized after 1 year and in long term. Next one is capital assets. What does it mean? So all tangible resources are called capital assets, like property, plant, equipment, natural resources. So here examples we have already discussed it. This is for the revision purposes here. Time and again we are discussing so that our knowledge can be perfect and complete. So what is posting? Recording an entry in an account in the general ledger or in subsidiary account is called posting. Common size balance sheet. What does it mean? It is a vertical analysis, result in common size financial analysis. A common size balance sheet is a balance sheet where every rupee has been related to the percentage of total assets. So capital assets, this is intangible assets like goodwill, patent, copyright, etc. What is depreciation? It's a decrease in the value of permanent assets. This is a fixed asset. It's called depreciation. This is very, very important concept. So current liability, my dear friend, this is again for the revision purposes. This is the liability which is payable within a year. It's called current liability, like account payable, bills payable, creditors, bank overdraft, etc. Long-term liability, it is expected to be paid after 1 year and long run. This is the resources. Here examples are capital, payable, bonds payable, mortgage, lease liability, bank loan. Equity capital, equity or capital, in case of proprietorship, the capital contributed by the owner is called capital. And next one in partnership, the amount contributed by the partner are called partner's capital. And in case of corporation and company, the capital is called share capital. It includes retained earning as well. Then liquidity. Liquidity means cash or bank. Liquidity measures ability to pay short-term obligations when they come due. Working capital is one important measure of liquidity. Working capital is equal to current assets minus current liability. So my dear friend, again here we are revising the accounting principles. These are the general rules, concept that governs the field of accounting. The general rules referred as basic accounting principles and guidelines from the groundwork on which more detailed, complicated and legalistic accounting rules are based. So all rules are generated and developed from the accounting principle, like in double entry system and dual aspect concept, where debit is always equal to credit, and the rules for the personal account, debit the receiver and credit the giver, and in case of real account, debit what all what comes in and credit what goes out, and in case of nominal account, debit all the expenses and losses and credit all the incomes and gains. So my dear friend, these all are the revision purposes. We are doing time and again so that we be perfect. So now the current ratio, this is very important. Current asset divided by current liability. The standard ratio is 2:1. Too high and too low ratio indicates the investment of resources are not equally distributed in different assets. So here, my dear friend, we are providing all these services on behalf of Vishwa Manav Kalyan Charitable Trust. This trust is dedicated to the welfare of the human being. So for your kind help, this information is provided. Thank you very much.